conference is a joint initiative of the magazine MO and Incofin, a microfinance investor. I especially welcome Mr. Frans Verheke, who is the chair of Incofin. Let me briefly present myself. I am Loïc De Cannière. I am CEO of Incofin Investment Management. As investors in microfinance with offices worldwide and with lots of field experience on the ground, we can see which impact microfinance can have on the lives of people at the bottom of the pyramid. However, we are very much aware that over the last years, microfinance has been under attack by a number of academics and former practitioners. The attacks came mainly after the crisis situations that occurred in a number of selected microfinance markets, such as India, Bosnia, Morocco, or Nicaragua. All of these countries suffered the disastrous consequences of reckless lending by MFIs and of over-indebtedness of their clients. I refer to studies such as What's Wrong with Microfinance by Malcolm Harper, or Why Microfinance Doesn't Work by Milford Bateman, or the recent article on microfinance by Milford Bateman and the Korean academic Ha-Yoon Chong in Mo. As a reply to Milford Bateman, the title of this conference is Microfinance Works. As microfinance practitioners, we do not pretend that we are in a position to make scientific statements on the impact of microfinance. Although we tend to say that microfinance can make a difference from what we observe on a daily basis, we are prepared to be challenged and to question our own approach. Being critical about microfinance while at the same time appreciating the positive impact is exactly what we will do this evening. In order to make the topic very tangible, we decided to select one specific MFI, AMK, in one specific country, Cambodia. We could have selected a different MFI in a different context, but we chose AMK in Cambodia because we had access as investor to a client impact study which has never been published before. On top of that, Incofin was a co-promoter of a large-scale survey among Cambodian microfinance to measure the degree of over-indebtedness of microfinance clients, together with Oikocredit and Blue Orchard. Both studies will be presented this evening. The impact study by Tanmay Chetan and the over-indebtedness study by my colleague Dina Pons.
Thanks, Loïc and my colleagues at Incofin for having me here, and thanks all of you for being here tonight. I think Loïc summed up the current debate very well in 2 sentences. And I was wondering when I first was told about this conference that if we were having this conference 10 years back, it would probably be titled Microfinance Works Better Than Anything Else in Development. And here we are today, almost defensive about microfinance. So I hope what I have to say today will take us away from a slightly defensive attitude. I think, as many of us know, there are different shapes and sizes and shades of microfinance, and it's difficult to label microfinance as one intervention. So what I wanted to start with was the fact that after the crises of the last few years, what we see in the industry is a move more and more towards an approach of do no harm. So a lot of the interventions today in microfinance are, in my view, very protectionist in nature. And we are moving away, I think, from the promise of 10 or 15 years back, which suggested that microfinance could actually do good, and it is not limited to do no harm. So I'll go through what we have experienced over the last 10 years in Cambodia, and hopefully that will help us all to shed some of the defensiveness and move more towards doing more than just doing no harm. To go back to AMK's own development, we had the research function set up by 2005. It started testing its methodologies in 2006 and 2007. AMK got in 2009 its deposit license, which was a huge step forward for AMK because it could do more than just give out loans. But it did take us a couple of years to roll out deposits in a proper way because of the necessity of the physical infrastructure for deposits. And at this point, we had, in 2012, we had the first study where we went back to the clients who were part of the research in 2006 and 2007, went back to the same sample to see what had happened over time. And that's the focus of my presentation today. A few things to keep in mind during this period, as the global financial crisis had, of course, a huge impact on Cambodia as well. And I just want to point out that you will see here a country that was doing quite well on the broad economic indicators of GDP growth, and inflation was well under control for much of the first half of AMK's existence. And then things unraveled quite quickly in 2008 and 2009. Inflation shot up to 25%, GDP shrunk. Cambodia's biggest source of employment is the garment industry, and there were fairly large-scale layoffs in the garment industry. So all of that came together in 2008 and 2009. And this kind of falls midway in the period that was under study for clients which were studied in 2006 and 2007, and then again in 2012. And you can see the impact on the microfinance industry here, including AMK. So growth in the industry came to a halt, and you will see that the portfolio quality immediately worsened for all MFIs. So this is just to keep in, bear in mind when we look at the results of the change study itself.
So I just would like to give you, first of all, some highlights of why we actually did that study. So basically, the idea behind that study was to say there were, and there's been for the past years, a lot of concerns, market rumors, conversations about the fact that Cambodia was a very saturated microfinance market and that there was signs of overheating and that therefore investors were not quite knowing what to do about it. And so we thought that our role as lenders and investors in this market was to just pull out resources, financial resources, human resources, and just, you know, contribute to the provision of consolidated, objective, and scientific information that could eventually allow us to base our judgment on something rather than on market rumor. So that's how, you know, the conversation about grouping with other investors came on the table, and that's the reason why we decided that yes, indeed, we wanted to know better what was the situation of you know, level of penetration and likelihood of over-indebtedness in the microfinance markets of Cambodia. So the way we started the studies was, well, to define what over-indebtedness was. And we started with what we call the objective definition of over-indebtedness, which is basically comparing the amount of debt that a borrower has to repay versus the amount of net income that borrower will use in order to repay that debt. So very simply, it was therefore looking at comparing the monthly installment that a borrower would have to make versus the monthly net income, meaning all the revenues coming from the business of that borrower, but also from the household and secondary income of the borrower's you know, family members, and deducting from that all expenses from the business and from the household, and ending up with a net income. Then the thresholds that we used was to say, well, if it happens that the amount of debt that you have to repay is, you know, more than 100% of your net income, then you're definitely in a situation of insolvency. If you are between 75 and 100%, then we would consider that, yes, indeed, you still have a buffer, but that buffer is very thin, so you would be considered as a borrower in a situation of risk. And then if you are below the 75%, we would consider that being a solvent client. 75% was decided, and what we found is that, in fact, you have a very contrasted map of where the microfinance institutions are operating. You find that you have 68% of institutions that have whether no service or low penetration services or reasonable, you know, level of penetration. So that's still quite a majority of the country. Indeed, we also have to recognize that meanwhile, you have 38% that are villages with a lot of players, and that we should not deny the risks behind that. But at least, this first finding for us was a way to say, if you are a microfinance institution and you have that map in front of you and you discuss it at the board and at the management team level, you can have a refined and reasonable geographic expansion strategy where you can indeed decide to continue growing at border areas with high growth rate expectations because you feel there is a market there and you have the right product to serve your clients. While indeed, if you decide that you want to continue growing in an orange or red zone, then it might mean that you are doing a growth that is not that responsible. So that was very much one of the first things that one of the first highlight of this study that we thought was very worth having that study being conducted. Multiple loans clearly increases the likelihood of insolvency, and more specifically as of 3 loans. Second, that when you profit from your core entrepreneurial business is not enough to finance the loan that you take, even though you do have a lot of secondary income from your household, the likelihood of falling into insolvency also increases. And then we run all sorts of other analysis which showed that there was no statistically relevant correlation with any other factors. And at the end of the day, among all the findings that I think I've tried to walk you through, the strongest one is the fact that multiple loans is clearly linked to the likelihood of insolvency and over-indebtedness. And that, most of the time, a client who would be in a situation of insolvency is unlikely to be a client with one big loan. It's likely to be a client that have been served by different institutions with several loans, and at some point the level of debt just get too much in comparison with the net income. So this was, very much the main finding that we had from that study. The second most important one then is the fact that profit generated from the business is a very important indicator in order to understand whether, in case other things go wrong in the household, the profit that is financed by the loan is still enough to repay that loan. So that was a second very important finding. The third one is financial literacy seem to be linked with over-indebtedness and multiple loans, with clients maybe being less equipped to understand in what they're getting when they get several loans. So as a conclusion, I just want to give you a few highlights of, after we conduct this sort of study, then what do we do with it? Apart from, being relieved that the whole methodological nightmare that we have gone through is over. The first thing I think is that study, as I said at the beginning, was a very important objective and scientific tool for us to be able to discuss with lenders, with investors, about what do we do and what is our strategy when it comes to investing in Cambodia. And as I said, it's not the same when you go and talk to an MFI and say, what is your growth rate projection for next year and where are you thinking you're going to grow? You do not have that conversation the same way if you have that map of Cambodia that I showed you, where you can see indeed that if an MFI answers to you that they want to grow in the green zone, you feel that there's indeed some room for them to grow and it seems reasonable. Whereas if you hear them saying that they will grow in the same urban districts where they know how to operate, then it seems that their strategy is not that well suited to the market. So that was, I think, one big thing that we managed at least to bring to the conversation table in the microfinance market in Cambodia.
Thank you very much, Dina and Tanmay, for these two excellent presentations that give us much more than just an antidote to the defensive attitude. They give us food for thought and also a good solid ground to have a further discussion on whether, or maybe not on whether microfinance works, but rather how does it work and for whom does it work. And I think that would be a little bit the direction that we take the discussion further in this panel debate that we have our three panelists invited. Eminent panelists, I think Loïc called them with good reason. And we would like these spectators until now to come in with their main comments from your own experience, because you're not an outsider, you know the world of microfinance very well. Do you feel there is reason to say or to prove what you bring forward, that multiple institutions in a certain village create better competitive conditions for the people taking up the loans? Is that something that you feel is happening, or is that something that you would just like to have researched?
No, this is actually based a few months ago. In last year, we had this conference just on the opposite of this river, of the canal. We had the microfinance lunch break on interest rates, and that was with a study also on, from the CGAP with the recent figures, and that was showing clearly that the competition actually was making the conditions better for clients. Loans, the interest rates, the cost of loans was going down, and one of the major reasons for that came out of the study was clearly the way that, yes, the competition of the people. But I agree completely with something else. Over-indebtedness, having multiple loans, I don't think it's a problem. I think everybody in this audience has more than one loan today, even more than two, I suppose. But you refer to the fact that
most people might not be part of the lower tertiary.
No, actually that is. But I agree completely with one specific aspect, and you refer to the fact that I lived for a few years in South Africa, and the over-indebtedness because of people who didn't understand that they were over-indebted was really a social, very difficult situation. We lived next to people who really thought they didn't have the feeling to be in over-indebtedness, and they lost all their belongings because of that fact. So the financial literacy and to be aware and the illusion of creditworthiness is really something very, very important, and I think it's very good to see in a place like here, like in Cambodia, that the sector itself is, let's say, concluding earlier than the people that they become in an over-indebted situation. I think that's a very good evolution.
Emmanuelle, shall we come to you to get your main takeaway points and maybe your questions about the two presentations?
Mm-hmm. Yeah, I think the two presentations were great to indeed talk about this microfinance works topic, even though I think I would have phrased it slightly differently. For me, I think it highlights very well that good microfinance can work, and that microfinance also can also get in trouble sometimes if you don't pay attention. And I think this is the picture that I have seen in most of the cases in most of the countries that I've worked in, and that is very well illustrated by the two studies. This good microfinance can work is really very well illustrated by the case of AMK. I think it's very interesting the way AMK has been developed from the start, with this clear understanding that outcomes, social outcomes, results don't come by chance. Financial results, profitability doesn't come by chance. You measure, you have accounting measure, you have an accountant, you have MIS in information systems, you have internal auditors, external auditors. Anyway, a series of management mechanisms to make sure that in the end you're profitable. And I think AMK has understood that you need to have the same if you want to make sure that you are socially efficient, that you indeed bring social change. And so this is something that has been highly developed in the sector since 2004, more or less. And actually, I think AMK has, from the start, embraced those concepts that we call social performance management. And so that means, indeed, having systems to understand the needs of your clients. It's basic, it's marketing. But microfinance didn't do that necessarily that much, or doesn't always do that, to really understand what clients need. Sometimes you do come as a microfinance institutions with preconceptions of what people might need, and you don't necessarily check. And so I think checking, understanding what are the actual cash flows, how you can adjust to them, what are the troubles that people can have when they don't repay, what happens, what is it? Is it really that they don't have the capacity to repay because they had a trouble, or is it because they don't want to repay? And reacting differently in those two different cases takes time. I think it's highlighted in the study of AMK. It takes time. You do have to study this, and it takes a bit of money also. But it's also what guarantees that in the end you reach a good result. The other thing I think that is very highlighted in the way AMK works is really trying to reach the underserved. So really going far, really going where the others are not. And we had done a rating a while ago about another institution, and we were trying to really understand the social outreach of that other institution. So we had gathered the addresses of all the agencies, of all the MFIs, and really saw that AMK was doing this, trying to go the next mile.
Your second remark on Dina's presentation?
Yeah. So the other thing is really this second thing of saying, microfinance can also, if you don't pay attention, go wrong. And I think the study that was done by those three investors is one that is crucial for the sector, especially in Cambodia, because clearly we have seen different countries, and Loïc was mentioning them earlier. We've seen different countries, going belly up, let's say, where microcredit transformed in a little bubble where that in the end burst, with quite a bit of suffering for clients, for institutions also, for investors sometimes. But so that happened. And I think what is very important is to make sure that in all the markets where microfinance is invested, there is sufficient mechanisms to prevent those things from happening, those overlanding mechanisms to happen. And I think I found the fact of having all that information, all this mapping at the village level, all that understanding of exactly what are the drivers of over-indebtedness and trouble, very important.
What would you add from your perspective to these reactions?
Yeah, good evening. Well, first I would like to say that I certainly do agree with many of the things that were said, and so I won't repeat some of these things just not to bore people. But one point I think that I would get first before going into the detail is that it is very nice that we are having such an evening, and it is very nice that we are having an evening open to, let's say, a general public, discussing, let's say, in a balanced way. I mean that the beauty of what is happening, we are starting to happening. We're just at the beginning of this, but is that we had all those years, and I was certainly part of it, where all people were within the fairy tale story, hoping that this was going to be the magic bullet. Then now we are kind of in between of the end of the period where this is the ultimate wrong, bad guys, whatever. And now people are trying to be able to deliver a reasonable, balanced speech, saying, okay, well, maybe you can do something, not that much. And there are many shortcomings, and it's some sort of a gray area, to take the words that Kurt was mentioning earlier. And in a way, this is very interesting, I think, because that's where maturity is coming. And I believe, in a way, I'm very happy behind the details of, do we like the way the survey is done, this question or this or that. The fact that main investors, because, I mean, after all, I mean, Incofin, Blue Orchard, and Oiko are obviously main players in the game. In a way, this is a learning curve also for them. For them, for us, for the whole field. Because, in a way, there have been many crises on specific institutions, in countries, and somehow people are starting to learn out of those to say, okay, let's be modest about what we can accomplish. Let's not say that we can accomplish a lot, but at the same time, let's make sure we don't throw the baby with the water of the bath. And let's find this in between. And as in many other fields, I believe this is some sort of maturity gain, and this is where it's going to start to be interesting. So I would get first this out. And I think, in a way, this should be a very, because, I mean, if we want to take the topic of the day, microfinance works, okay, I'm anxious to be like in 10 years from now, where the debate won't be about if it works or if it doesn't work, because exactly as you say, good microfinance can do good work and bad microfinance can do disaster. Okay, so that's very clear. And I think we all have seen it, very nice and very bad case. And there are so many research showing, in some case, some sort of impact, in other case, wrong type of impact. And so I think this is really the main thing to get out of this. I think that what is really to be learned out of this is that you've got active players, governmental bodies, whatever they are, investors, institutions, who start to realize that if we really want to make a difference, we have to work on a sound base, starting with the demand of the customer. And it's a very simple idea that's the way it started. I mean, originally 30 years ago, but it's coming back, and we should see this in a mature, happy way.